Nick, thanks very much for joining us on Vantage Point.
Thanks for having me, Simon.
Pleasure. We were saying before, I think it's been 25 years that we've known each other, which is quite scary. And I had a Facebook memory flash up the other day of Oxfam Trail Walker from, I think it was 2012 or 2013, which we won't go into because there's a few scars on that, but it didn't break us. So it's great to still be connected and working close within the markets. Before we get into LSN Capital Partners, maybe if you just give us a bit of a background in terms of how you came to be in markets, and the journey towards LSN.
Yeah, sure. Thanks for having me, Simon. But
Pleasure.
I guess my journey is probably maybe a bit different to others, and I actually started in the mailroom at Bankers Trust.
That's right, yeah.
Delivering, they used to produce daily research reports. I used to have to get into the office, package them all up and deliver them to the fund managers before their morning meetings at 7 o'clock in the morning. So straight out of school, into the mailroom at Bankers Trust effectively, and worked with a team at Bankers Trust who was on the institutional desk and got very close to those guys. And from there progressed to Macquarie Bank, worked on the retail side of broking. And then, my boss at Bankers Trust went off and started K2 Asset Management.
Yep.
And then a few years after that, he called me up and asked if I'd like to join. So,
And you spent 16
years.
It's
Yep.
a lot of years.
Started at K2 as a dealer.
Yep.
And then progressed onto the funds management side of the business and spent over 10 years managing money across a range of products, but specifically, mostly on Australia. And the most success, for me was in Australian small caps or stocks outside the top 100.
K2, I think a number will obviously remember, but many might not. It got pretty big at one stage.
Yeah.
Like
When I started, we had less than 50 mil under management. I think I was the 5th employee. Business grew to over $1 billion. Over 25 staff. Worked with some great people there. Nick Griffin went and started Munro. Josh Kitchen's gone to Sintra. Jeff Thompson, Alfinity. Nick Redaway started Drummond Capital. So there was a great core of people there, and I did learn a lot around managing money and managing risk, and starting a business and being involved in that sort of startup funds management business. And
don't want to get too personal or too specific on LSN, but it's much smaller. It started to peter away a little bit. What do you sort of see? Why'd that happen? How did that happen
at K2?
Yeah.
Oh, look, I just think these businesses, they're in growth mode, or they they're in sort of growth mode, and to run these businesses and take these up to sort of enormous amounts of scale requires a lot of work and a lot of succession, and I think inevitably founders of businesses and just the success that K2 had can lead to some distractions, and also I think just the demographic of the staff, like myself and all
ambitious
the other guys
and the rest of it,
probably want to go out and do their own thing at some stage.
It's almost like a victim of their own success at the end of the day.
Yeah.
And so you spent 18 months, I think it was. You left K2 when K2 was still going along. Left K2, sort of umming and ahhing about what, and I remember it felt like a lifetime, and that was for me.
Yeah.
I was saying yesterday, 18 months out of the market's probably like 5 years.
And it was COVID as well.
Yeah.
And so I guess, left knowing that I wanted to do my own thing, and just sort of formulating how that looks and how that works, and what the opportunity was, and then obviously teamed up with my business partner Nick Sladen.
Yep.
We're a similar demographic. We've known each other for a long time. His journey is similar, and he's been in markets as long as I have, been managing money as long as I have. We both think about investing in the same way, and so we got together, and his sort of career journey similar to mine, where looking to do something for himself, and so I guess the moons aligned and the timing was right, and
How important is it to get along well and have the same sort of investment mindset with a partner versus also almost being a bit of an echo chamber, that you're both thinking along the same lines and not challenging each other?
Yeah, I mean, it's super important. You got to be on the same page. It's like
it's like a marriage,
sports. Yeah. It's like footy clubs. It's ultimately you got to have the same ethos and same views around, you know, what's right, what's wrong, and how you view the world. But, you know, you're not exactly the same, and that is a positive. Just see things slightly differently. You know, I think we complement each other with our skill sets, and so far in this marriage, it's been really good. Obviously, markets have tested us, and that's the ultimate sort of test of the relationship. And the business relationship is during those times when markets are drawing down and when stocks aren't working, just how you both work together and you manage those sort of tough times.
So speaking of a good pivot, you launched a fund sort of 4.5 years ago.
Yep.
How did that go?
Yeah, well, I mean, we had a plan, and as Mike Tyson said, you know, everyone's got a plan until you get punched in the face, and which we pretty much copped. You know, we launched the fund in December 2021, which was pretty much the top of the market, you know, the zero interest rate policy market effectively.
Perfect.
And sort of drawdown in small caps of 20% in the first 6 months. So I think 3 of those months were in the top 10 worst drawdown months in history.
How do you deal with that from again, it's whether it's a fund or a business, basically it's a startup, right? Like it needs to work.
Yeah.
And there's a lot of stress in terms of young family and I suppose personal pride as well. Like that it's
and it's public. Like your numbers are public, you can't hide.
There's a scoreboard.
There's a scoreboard, and despite you're managing money for the long term, but the reality is, you got monthly reports, and especially in the early days when people are keenly looking at how you're going, and there's people that trusted us with their money in the early days, and they backed us, and we'll always be thankful for that. And but it was tough, definitely, and it just, I guess what it did do as you come out of it though, just solidified our process and solidified how we sort of manage money, and I guess the upside as well is investors who gave us money in those first 6 months. Like I think the fund's up now 50%, and we dropped for 20 in the first 6 months. So investors who just blindly wrote it out, and
back
sort
to
of backed
investment
us in,
process, and
the returns for them have been great, and we're really appreciative of them, and we're really sort of happy that they've delivered. We've delivered for them as well.
In terms of those first couple of years, was there ever a point where you're like, "Fuck, like this is not going to work," or
I just, like you say, there's just your pride's on the line, everything's on the line, and you just do whatever it takes to make it work, and. Also been in markets long enough to know that performance is not linear, and you have bouts of bad performance for various reasons. But we're just super focused on getting the performance right, and then I guess the other part of starting your own business is the business aspect and the raising money aspect and the distribution side of the business. So that was also you're juggling that as well.
We've talked off air about those first couple of years, like I sort of termed it a bit of a grind. Obviously, the massive drawdown doesn't help anyone. But in terms of being sort of rough in line with market, there's so much noise from what I see in terms of there's a million small cap funds. The importance of trying to deliver early is really important in terms of inflows for FUM. How do you just sort of navigate that period with, we've got to stick to it, and when we start performing is when we need to really hit the tap in terms of FUM? Yeah,
and I guess we always sort of, the rule of thumb in the industry is 3-year track record for those that don't know you well, and so we're really focused on not only building our track record for the first 3 years, but just the other side of the business and getting our fund into I guess like fighting fit as far as just the structure of the fund, the daily pricing, getting onto platforms, getting rated, going through all those other business aspects to make the fund commercially viable, and then obviously focus on performance at the same time. So that was sort of deliberate from us in the first 3 years, and then sort of after that 3-year period is then, for us to get out there, push the distribution side of things. We signed up a distribution partner 6 months ago, which they've been really good as well. And I just think delivering returns in a sustainable way, and part of what is attractive for us is just, we're totally aligned to the business. you know,
Needs to work.
It needs to work. Like, you know, we're all in, you know, we're investors in the fund. You know, the outcome of, you know, the performance in the business is dictates the outcome of our lives effectively. And so, you know, we're both competitive people, you know, we're both hungry.
Old Scotch footy.
And so, yeah, I guess, you know, you'll do anything to make it work. And I guess it has tested us in the early years.
But how have you sort of grown up or gotten better at managing that stress, particularly with a young family? Like, yeah, do they know when you've had a shit month or a shit quarter, or the girls are getting a bit older? Sort of one in, all in. They know what dad does. Yeah.
Oh, look, I think early days when I was running money, and you know, it was a great opportunity and a great privilege to be given some capital at K2, and you know, we were measured on our performance, and it was, you know, again, highly competitive. And so I guess as a young investor, you wore the ups and downs. But I think as time's gone on, you know, I'm a lot better at just, you know, focusing on the stocks that you own, and you know, just having a lot of confidence around the businesses that you own, the people that are running those businesses, and just generally being in contact with them, and sort of that helps eliminate a lot of the headlines and the noise. And obviously in the last sort of 2 years, we've had, you know, some extraordinary volatility, but just focusing on the stock selection, the businesses that you own rather than the market has definitely helped. And as far as the family, I mean, look, the reality is you start your own business, whether it's funds management, any business. Like my father-in-law started a business from scratch, you know, sitting in the front room with a desk and a pad and a pencil, and you know, started a manufacturing business. And your family's in, like, you know, they're in as well. Like, it's just the reality, and that's what motivates you and drives you, and that's what, you know, when things are tough, like it's not just you sort of and your pride, it's sort of the collective family's, you know, well-being as well. So, but at the same time, I'm not taking it home. I'm not, you know, mincing around at home when you've, you know, Trump's made some headlines, and you know, part of that and working with the founder of K2, he was great at just
switching off.
Yeah, and also just, you know, keeping focused on the long term, not having the ups and downs dictate his behaviour and how he runs the business.
I remember back in the K2 days, like in terms of in meetings with management, you were more intense than you are now. Maybe it's just with the older age, but
probably.
How do you feel like you've changed as a person, and B as an investor, in terms of, particularly in small caps, like the better relationships you can build with companies, the more intel, insight, confidence, and
I think also just the environment, like, you know, like K2 was, you know, the great thing about K2 in one sense was it was very performance driven, and Campbell, the founder, gave you the space to go and invest and make mistakes. Like, that was, he was never going to tell you what to do, how to run money. You had to find your own way to do that. You had to find your own process. But he was obviously, you know, he was a very good investor, and so you pick up a lot from there. And then at LSN as well, like, equally as important as having, you know, Slasher as well. Like, he's also similar ilk as far as managing money and markets and sort of ups and downs as well. So that's been good. But I think that the key for us, and you know, the thing that just becomes more and more important, is just management teams and having close contact, and you know, understanding who they are, how they operate, and just gives you the confidence that when markets are swinging around, that you know, these guys and girls that are running these businesses are going to take care of it. And that's what gives you the confidence in the position size you have, and it gives you the confidence when markets and economies are swinging around a bit, that they can deliver. And it's not just, you know, the in boardroom meeting, it's also, you know, seeing them at conferences, seeing them at social events, knowing people who know them. Like, we're always sort of doing DD and you know, doing that sort of 360 review, and it's amazing the snippets you pick up. You speak to people used to work at these businesses, what sort of managers they are.
The intangibles that you don't see in an investment deck or in the boardroom.
And it's all about execution, really, in the end. Like, we could probably chat around our process and how we look at things, but I guess it's all about execution. It's all about management. I think starting a business has made me appreciate a lot
Yeah,
more.
that's fair.
Just the control and the sort of decision making process and how that leads to outcomes.
Instead
in
of
your
just
own
taking it for granted, sort of thing.
Yeah, absolutely.
Yeah.
And so that's definitely helped.
Mm.
Me as an investor and grow as an investor, and that's helped our process, and I think it's helped our performance as well. Like our performance, in the fund has actually improved as the journey as time's gone on and as the funds matured.
How have you seen that you've changed, both you and Slasher, in terms of investors or in terms of the investment process, from that first year where, yes, you've got the epic drawdown, but you also don't want to blow shit up.
Yeah.
Like are you more reckless now? Like that's not the word you'd obviously, but
No.
do you know what I mean?
Yeah.
Do you sort of relax a little bit? Whereas, and I also often liken it that, like it's Harry Mackay. Sorry to bring it back to footy, but that he misses the first shot. You're a bit more careful on the second one. You're going to miss, sort of thing. Or now you've got comfort in the investment process, you've got comfort in and confidence that you deliver, you back yourself more, as opposed to we'll just wait a little bit. We'll wait for another quarterly or another reporting period before we enter.
I think your process is always evolving. And one thing we've probably improved on is just position management.
Yeah.
As time's gone on, just around exiting positions and going into stocks as well. But it comes back to just understanding the business and knowing the management, and having confidence around the earnings outlook and the earnings sustainability. And I guess we'll probably touch on ones we got wrong, but I just feel the common trait between stocks we get wrong is just that when there's a macro sort of tailwind, or there's an industry tailwind that's blowing, and you invest in a business on the back of that tailwind, but execution, is not
deliver.
there.
Yeah.
As a management team are not up to it, and you sort of get this scenario where the stock price is rising because the tailwinds of the industry are coming through, but underneath the surface, the execution.
Management's just not executing.
Yeah.
So if we talk to someone, I was going to say the pub, but it's probably not where you pitch the fund. A coffee meeting in terms of potential, investor into LSN. Why would they look at LSN versus another small cap fund? And
We get asked
sort
that
of
a lot. Like,
performance
what's
look
your
like?
edge? People always, they always want to hear some story that's like you've got some secret formula that, no one else is looking at some metric on the balance sheet or the P&L. But, I think for us, in isolation, we have a process, we have a fund, but I think, the alignment piece is huge for us. Like we're 50-50 owners in the business. We're investors in the fund. Obviously, when in the very early days, when you rattled the tin, you've got family, friends, close people in your...
Which puts a fair bit more onus to deliver.
So our alignment is massive, like as far as, needing it to work, wanting it to work. The fund is, covers all sectors. Like we don't exclude any sectors like resources. We do resources. It's obviously been, a hot space in the last 12 months. So we've made really good money there. So again,
whereas there's some funds that just can't touch that, right? In terms of mandate.
And both Nick and I have had, good success in resources in our previous lives. And so, we're always keen to make sure the fund is, available and open to all sectors and all spots. I think our process has obviously stood up, and I think that's been tested. We've had, I think, 15 interest rate rises since we started the fund. We've had, a tariff meltdown. We've had 2 wars. So I just think the process is
it's a fair bit in 4.5 years.
Is fighting fit. But I probably, and the capacity piece as well is important for us, like just having capped capacity. We've both run funds, in excess of $1 billion, and the definitely performance can be impacted when capacity gets too large.
But in terms of best win, not necessarily making so much money, but potentially it's about no one was looking at it, or people were doubting it, or was against the grain sort of trade. What sort of sticks out for you?
I guess I'll give you a couple of examples, but maybe the first Genus Plus for us has been our best, performing stock. A business I actually invested in the IPO when I was at K2 years ago, and
is that right?
I know, and it was like 50 cents or something at the time, but and then started LSN, and then made contact with the founder, Dave Riches, owns half the business. They're electrical.
Because he's not. He's pretty young, right?
He's young, yeah.
Yeah.
He's an electrical engineer by trade. You know, the business is a high voltage, electrical engineering company, and the industry tailwinds were blowing, but his execution and his industry knowledge and his, in a sense, the same as us, like totally invested, totally committed, totally, he owns half the business. His father, was involved as well. And so I guess why that's been such a good one is we're early. The market cap was sort of sub 400 mil when we bought it. It's now 1.5 bill. Profits have tripled in the last 3 years. And just being early, off the radar, no one covered it. And we just rated him so highly, and every time we met him, I was super impressed. And the execution piece was always.
So you got the tailwinds, but followed up, backed up by the execution.
Oh, totally. And then more recently, like in the last few months, I think Megaport's probably one that we bought. Got it wrong early, obviously with the tech meltdown, but for all the work we did, all the times we've met Michael Reed, the CEO. Spoken to him many times, and from the industry work we've done, that they were a beneficiary of AI and compute power, and
had a good announcement yesterday.
Yeah, good couple of months. It validates that, and just there were people doubting sort of the outlook and the strategy, and even Michael to some extent, and it's just validating when you feel like you back them in and they deliver, and it's only a short period of time, but it's just they're the good ones, I guess.
And for every good one, there's a maybe there's 10 good ones, one bad one. Let's hope it's that way. But what's something? And again, don't have it high level in terms of a sector. Let's talk a stock. Yeah. Where whether it's you can be honest, whether it's the management hasn't executed or whatever it might be. That just being completely blindsided or just got it completely wrong.
Yeah, and that's the reality of what we do. It's
not going to get them all right.
Not going to get them all right. We have a process to manage the ones we don't get right, which is just as important. And back at K2 and Nick's track record as well, there's a process, and that's super important to help manage the ones you get wrong. But look, I guess one that we didn't actually lose a lot of money on it, but we got wrong was E-Road. Again, just they're a New Zealand-based business that does telematics for cars, and then they collect revenue for a road usage charge, they call it. They have them on heavy trucks in New Zealand, and it's just a way the government can generate revenue. And they have a dominant share in New Zealand. They're trying to break the US, and Australia's looking at introducing this E-Ruck, they call it, which they should be well positioned. And the stock went nuts.
Yeah.
Everyone was on board.
This is off the sort of macro.
It's off the tailwinds of E-Ruck, where governments need more revenues, and so they're going to start charging people to use the roads, and your car's going to be a luxury, at some point in the future. And it also captures EVs. Yeah. Because EVs obviously bypass the fuel tax. Yeah. And the stock went nuts based on the tailwinds of, and you do the calculations around if they got this share of this market and that share of that market, and
no brainer.
Yeah, no brainer. And obviously, they promised to win 3-4 contracts in the US that failed to materialize. The cost base is enormous, despite having 200 mils of cost. The cash flow is pretty poor, and so they had a downgrade, and
stock got slaughtered.
Yeah, and we sold it, and it's probably halved since. Not half, it's probably fallen 30-40% since, but. Yeah, so just that thematic which I talk about, where got macro tailwinds, industry tailwinds, and the bottom up doesn't match up with the top down.
How quickly do you respond to something like that? Is that like it comes out, it's a shit result, they've missed here? Do you have a sense of pride again that you sort of try, and this might be my retail investor hat on, that it's like, it'll bounce, just need to sort of see it out? Or do you go, tailwinds there, opportunities there, they haven't executed, let's just sell it?
We go through the process to and isolate what the issue is, and it's obviously a lot relative to your expectations. You obviously have an investment thesis, you have a process, and there are some key pressure points that you're looking for them to achieve and to validate your thesis. And if they're all broken, then clearly the thesis is broken, and then there's probably an element of just execution, like is today the day, is tomorrow the day? Do you need to speak to management? But in that case, I think we exited half and then met management, and after that we
okay. So you caught up with management.
Yeah. And I think also just managing losers and managing stocks that aren't working is not only from a performance point of view, you need to manage it, but it's also just your mindset. Like, it might be 2-3% of the portfolio, but it takes up like 50% of your headspace, and that's managing that, and you've always got stocks that you're looking at that potentially better opportunities, and so just getting that balance right.
What do you think you learn more in, the winners or the losers?
Your losers. The amount of work you do on your losers.
Yeah.
Like, as they're falling, as they're not performing, you're just forensically analysing what you're missing, and it still doesn't prevent you from getting others wrong, and that's the reality. But just being fully aware of where you can get it wrong is just as important. But doing it over a long period of time, and just having more patience, I think that's probably another key aspect. Like when business, and I think early days you can see these as stocks, and as you get older and more mature, they're businesses, and that's business momentum has a lot to do with performance, and businesses that continually perform and deliver, generally re-rate, and the earnings follow, or the earnings and the re-rate follows.
In terms of sectors, we talked about GNS Plus. Obviously, it's sort of electrification, thematic. Whether it's contractors in terms of defence. You've been a long-term holder of Duratec, which has performed really well. How do you sort of pick? Because there's probably 6 to 8 ways that you could play the electrification space. You can't be in them all. How do you sort of go about picking them apart and choosing one or two winners in the race? Because if the thematic blows up.
Oh, totally. And we're conscious of that. At the moment, you should have your whole portfolio in electrification, and there's lots of stocks that you can do that. But I think it comes down to just being an expert in your field as well. Like, that's for us super important. Like, say for Genus, he's been doing it for 20 years, and it's in his blood, and they are experts, and we know people in the industry that are not in listed world, and they always spoke really highly of their execution. Same with Duratec, founder-led business. They're meticulous with their contracts, and contracts can blow up. That's the risk in that space. But founder-led, really strong execution, experts in their field in that space. It's just we're always a bit sort of wary of those businesses that are pivoting into industries, or they're just chasing sort of, I guess, thematics and earnings in that way. So we just try and find the experts in the field.
And in terms of particularly, maybe it's changed having a distribution partner, but in terms of, I hear CEOs talk about, the split between investor relations, dealing with the market and the business. How does that sort of look from a investing versus investors, communicating and building farm and
it's super important. Like, the running money is one part of it. Running the business is another part, and raising money is another part. And, they're all equally as important. I think, obviously delivering strong returns is sort of almost, a necessary, but having a distribution network, making sure the clients know that who you are and, you're out there, and just creating sort of, a brand and a business that, is trusted. Trusted more than just your performance. Is trusted
more than just numbers. Relationships.
Trusted when people go online and search, for your business. All the touch points, and it's no different to when we look at businesses and we meet people outside the boardroom. People do that for funds. They do that. People just want that validation that these guys are
real and
real,
good blokes,
good at what they do. They're not taking undue risk. Like, these guys aren't risk takers. They're not rogues. Like, and that just takes time to play out. But I think we've definitely seen the sort of tailwinds of that. Like, the numbers are great, and we've done it in a sustainable way. We're not taking extraordinary risks. Our biggest positions are sort of 5%, 4 to 5%. They're not 10, 12% positions. If you look at our attribution, we haven't had one microcap stock that's 10 bagged and delivered us half the performance. So,
and then sustainable.
Yeah, and then, you know, I guess our valuation sort of focus as well has sort of helped navigate some of these drawdowns where you've had large drawdowns in certain sectors where they've got super overheated. So we probably miss out on some of that upside when markets are super hot, but, you know, we try and just
sleep a little bit better at night.
Yeah, and like the numbers show that if you're investing in businesses on 60 times earnings, like if forward returns of
something's probably got to give.
Yes, and yeah, it's something you might not even know. Something left field comes out of it. So, yeah.
In terms of we're sitting here, hopefully not in 4.5 years, but you know, looking forward, crystal ball, 3 to 5 years. What does sort of fund look like? What do you sort of restrain or constrain of that in terms of capacity? And is it just you and Nick, or as an analyst, how nimble?
Yeah, I mean, growing the team's definitely part of the plan. We talk around sort of capping the fund around 600 mil. That for us, with the liquidity analysis we've done, we look at the stocks we own, we look at how nimble you can be. We think that's probably the optimal sort of size where you can still generate really good performance, and you've also got a business, a business behind it as well. So that's probably the size of the fund that we will aim at. That's sort of pegged at 0.15% of the small cap index in total. And then at that size, but also just the path to there and the growth there, you see extra staff coming on board, on the investment side, but also on the back office and ops side. But having that third party distribution helps alleviate sort of that body of work from us as well. And it means that we're just much more efficient and targeted when we go and see clients and potential clients, and then the focus can go back onto running the money and managing the money. And
it's been a journey, both personal and professional. Well done for building LSN into what it is today.
Thanks for all your help.
It's been a journey and it's been good fun. But looking forward to watching the next 3 to 5 years. Good luck.
Thank you.
Cheers.